Hey there, I'm Angelo Datseris, President and CEO of LLG, and this is your monthly mortgage 3 points update. First point, the media impact on mortgages. So let's talk about this for a second. We got so many calls and text messages like, oh my God, Joe Biden's raising the interest rates and the costs on good qualified borrowers are going up and I can't believe this change is happening, blah, blah, blah. Like, you can't imagine how blown up we got about this. It was crazy. We also got calls about, oh my God, a 40-year mortgage. That's crazy. It's going to be a great thing. Well, listen, first off, 40-year mortgage is only for FHA modification, so it's not a real program, so don't think it is. Second off, the thing about the media telling everybody that mortgages are more expensive for certain borrowers that are well qualified, but other ones that aren't, and how they're subsidizing it, what they're talking about is the LLPA change that we have baked into interest rates months ago. So chill out. It's already been out there, and some said, oh God, it got delayed till August. Well, yes, one of the new rules got delayed, and that was the DTI change. That got delayed till August. So this made me realize, like, the media impact on mortgages is huge. It can impact my business, right? The media impact is massive, so it's so powerful. Now, did you know it's on average $9,400 cheaper to use a mortgage broker over the life of the loan? Let's push that out to the mainstream media. See if the channel picks it up like CNN or MSNBC or business. All my friends in the mortgage business would blow up if they knew that. So we need to understand that the media is so powerful. Like when the Fed announces a 0.25% rate hike, people go bananas. But it means nothing to long-term mortgages. But the media blows it way out of proportion. That's why it's imperative you work with an experienced mortgage broker like myself to help you navigate these media headlines. Second point. Builders and lenders cutting out real estate agents and mortgage brokers. So look, we've seen this for years where builders are going out of their way to drive everybody to their in-house lender by giving a huge discount on the house or giving them extra benefit to the house, but you're charging you so much more on the mortgage. It's not better for consumers. We're now seeing it with lenders. Lenders trying to cut out real estate agents like Rocket Mortgage. They came out with their Buy Plus program basically saying, hey, don't use a real estate agent. Use your own internal people, and we'll cut 1.5 points off the discount of what the real estate agents charge. They are trying to cut the real estate agent out. That's bad for consumers, and then they're also going to charge them on the backside of it 4 or 5 points, making more money, doing bad by consumers. So don't you realize this is so bad for the industry and for consumers? So it's mind-blowing to me to see Rocket Mortgage do this, trying to cut everybody out. Makes me realize that mortgage brokers are a threat to their bottom line. Mortgage brokers are doing right by the consumers, and seeing lenders like Rocket Mortgage or seeing different builders trying to cut us out shows us that it's not good for consumers. It might be good for those lenders, but not the best for consumers and mortgage brokers. Real estate agents, you have to understand, are best for consumers. It's interesting to see these programs continue to come out as these companies are struggling to make profits. They're trying to cut people out of the process to make more money for themselves and hurt consumers at the same time. Third point, inflation driving interest rates. So a lot of people like talking about the Fed, like, oh, they raised rates, so rates keep going up. But more of what it's tied to is inflation that people don't realize. The CPI, the Consumer Price Index, that report that shows overall inflation and shows a lot of different things that involve what we're going to see in mortgage rates. And so a lot of people look at this number to determine, are rates going to go up? Recently, the CPI report and inflation numbers that keep slowly falling, we may see rates come down as this happens. Now, does that mean it's going to drop from like a 6 to a 6.5 to a 6 and a 5, or 5 to 4.5? No. But we can see a decline when inflation slows down, interest rates will go back down. And that's what we've seen, that trend, and that's what we're seeing now in our inflation numbers as of late. Thanks for joining me. I'm Angelo Datseris, and that was your monthly mortgage 3 points update.